So, our next topic is on minimum alternative tax. So, we call in a short form as MAT. This is defined under section 115JB. So, what exactly this is the concept of the minimum alternative tax is? Many companies, they always try to uh, evade the tax. This aviation of the tax, because no company want to pay more taxes to the government. So because of this, they want to avoid the tax and they don't want to pay the taxes to the government. In order to do this, they try to use the loop holes of act. So the government has recognized this. The many companies are uh, not paying the tax using the loopholes of the act, and though they have the good profits in the books of accounts, uh, they have the good profits, but still they don't pay the tax. So when they don't pay the tax, they are trying to avoid the tax using the different loopholes. They came up with the concept of the minimum alternative tax. What exactly this means is, if the company is having 18.5% of book profit, %, or less of book profit, then they need to pay the minimum alternative tax. They have to pay the tax irrespective of the profits. They have to pay the tax. The tax percentage will be 18.5%. For the other companies who is earning good profit, that is, like if it is more than 18.5%, then they have to pay the 30% of the tax plus cess. But when it is coming to the, if your book profit is less than or 18.5% or less than 18.5%, then you need not pay this 30% of the tax, rather you have to pay the 18.5% of the tax. Don't confuse between these two amounts, two percentages, 18.5 and 18.5. This is the tax rate and this is the book profit. The book profit is the profit what they gain, and this is the tax percentage. Both are same, but the provision is different. That's it. When the book profit is less than 18.5 or 18.5, then they have to pay the 18.5% of the tax to the government and plus cess. Clear? And the next is, how do they define this book profit is the question of matter. You might have already learned the calculation of income from business and provision. So in the same way, you have a uh, a format for this, like you will be taking the net profit, you will add some amounts and you will less some amounts. So they have very clearly mentioned in the act, as per the Income Tax Act, what are supposed to be added to the net profit, what are supposed to be deducted to the net profit, and you will arrive at the taxable amount as a net profit tax to be taxed under the income tax. Now, comparing this amount with the sales turnover, you will get, if on the sales percentage, if whatever the amount you arrived, if it is 18.5% or less than 18.5%, then the entire amount is taxed at the rate of 18.5% plus cess. Regarding this, I have given in your notes very clearly what are supposed to be added and what are supposed to be deducted. There are 8 items. Generally it has to be added to the net profit. There are 8 items which will be deducted from the net profit. Already you have done this sort of problems when you have learned the income tax 1 and 2 in your previous semesters, but this is regarding how you are going to implement section 115JB and what is the requirement, why the section 115JB came into the existence, and 18.5 regarding the 18.5 percentages. At the same time, the main concept is the companies are avoiding the taxes, and in order to give the relief to them, at the same time government don't want to lose the revenue. That is the reason this 18.5% concept came into the existence. They have given some tax relief to the assessees in order not to avoid the taxes, and they have charged 18.5% as they have fixed the 18.5% as a tax rate.